Hi, and welcome to episode 22. We are with Alice Chin on the Alice Chin podcast, and we're talking about what's behind the curtain financially with real estate. I've always wondered how real estate agents get paid, and obviously you got to be careful what you talk about, but when you're looking at really, really brass tacks at the end of the day, you see volume, and then you see what's the bottom line, right?
So we'll kind of go through like general financials, and then we'll take a deep dive actually as far as like what financials should look like, you know?
Okay.
And what agents should know, whether they're solo agent or a bit larger team, you know, what they should know about their financials.
Okay.
So from a high level, agents are independent contractors, as you know, okay, just like loan officers, right? And our income is, from a high level, it's called gross commission income, okay? So that is what most people would consider as gross revenue on most other financial bank statements. So gross commission income is the gross, it's not the net, okay? So that is what people see, the outside public, as to what they think agents make, keep, right? It's far from it. That is the gross, okay, before anything's taken out. So on a team, or if you're a solo agent, there are certain things that are taken out of that, right? So a lot of that is on a team payouts. So, you know, I pay the agents on the team from the gross commission income, okay? And then in certain other businesses, it would be called cost of goods sold. So anything that is associated with the cost of, not the cost of doing business, but associated with the cost of actually that piece of business coming in. So referral fees, things like that would also come out before then you get to what's called the gross profit line. Still with me? I know you're probably falling asleep now.
Yeah, no. We're good.
Okay. So then after gross profit, then you take out your expenses, right? Okay. So you've got all sorts of expenses in real estate, right? You've got your dues, you've got possibly coaching, you've got marketing, you've got maybe you have a business car, maybe you have a home office, maybe, again, I'm not an accountant or tax consultant, but most of us have a ton of expenses, okay?
Right. And good disclaimer, by the way.
Yes.
You never want to trust a realtor or a loan officer for your accounting needs.
No, not a CPA. But then also what most people don't realize is, and this is not like a sob story, this is just the truth, okay? Realtors, we're independent contractors, so we don't get any benefits, we don't have health insurance, we don't have a retirement account, we have literally nothing. So if we want that also is an expense, right? That we have to pay for out of pocket. So after that, the expenses are subtracted out, then you see net income, okay? So on a team, all the salaries and all that for the employees would be under the expense category. Still with me? Okay. So what most agents don't know, or they just probably don't have an intimate relationship with their financials, right? I've always been taught that the numbers should look like 40, 30, 30. Okay, and I'll explain. So meaning your gross profit should be about 40%. So gross profit over your GCI should be 60% if you're doing the math that way, okay? Then your expenses should to GCI, that calculation should be no more than 25 to 30%, not to exceed, okay? So that means your expenses should not exceed that, okay? Otherwise, you're overspending, okay, on marketing or something. Your expenses to GCI should not be more than 25 to 30%, but you have to add back the owner's salary. I don't know if you've ever heard that. So in corporate financials, it's called EBITDA, earnings before income, taxes, depreciation, and amortization, okay? So it's basically the equivalent of that. And you add back the owner's salary. This is very, very important because the owner's salary is considered discretionary, okay? Because when the business is up, it could go up. When the business is down, a good business owner will deduct it from their own pay, you know? And so it's discretionary, and it has to be added back in for the purposes of evaluating the business, like attributing a value to the business. Does that make sense?
Yep.
When I do business brokerage, for example, okay? because again, it's a discretionary number. So after you add that back, then that number should be 25 to 30%. Then your net income for a healthy team, okay, should be anywhere between 30 to 35%. Your net income.
Okay.
So again, most teams, I would be shocked if most teams, team leaders, agents even know their financials in these percentages. I look at it every month minimally. I'll go through my financials after it comes back from my bookkeeper, and I'll do the math and I'll check the percentages really quickly and just make sure that we are on point,
Right.
If we are spending too much, it'll be very apparent, if we are not spending too little, but like if we are under the line, then it gives me a green light to be like, oh, should we do this marketing? Should we spend the money for this? Do you know what I mean?
Right.
It is like it's something that I learned actually at KW. It's a red light, green light sort of situation, you know? And so then at any given point in time, I know where we stand. And then it makes the decisions a little bit easier because then if I do the numbers and I'm like, no, we can't, or we can, but it's going to have to be next month or next quarter or whatever.
Right.
So yeah, that's
so basically you're staying in the black. That's
staying
what
in the
we called.
black. Yep.
And I always, we're going through this coaching platform as well, and they always say the number one role of a real estate agent, and it's different as an owner, but real estate agent would be lead gen and then counting the money. And the counting the money part, the accounting is in running a business is the absolute most important piece.
It's very important
of the equation. Obviously, you rush to profitability is always number one.
Yep.
Because that's how you get the accounting started.
Yes.
That's how you start a business.
There's no money then.
Yeah, you don't get no money. You might as well just sit back and get a 9 to 5 and be okay with it.
Yes.
Right.
Yeah.
But this is a different level.
It's different.
It's
It's
a
very
different
different.
level. And I like that. I like how you're breaking it down into a science. And I think that so many people miss that piece. And if you're not doing that, you could go out and make it rain all day long. But if you're not seeing the bottom line, it's going to look like an 8-inch hole in your bucket.
It is,
where
yeah.
It's just
you
flooding
don't
out
know.
money.
Yeah, it's just a black hole. It's like an abyss. Yeah.
Yeah.
And so it's super, super important. I think a lot of teams, it's not even I think, I know a lot of teams do not function the way that my team does. A lot of teams, they're what I call collectives or conglomerates, and they might operate under like the same umbrella, a team name, let's just say, okay? But the agents each, it might be an ego thing. I don't know. They want credit for their units and their volume, and so then they individually, that's their value proposition, that they individually get to keep their units and volume, okay? And then they get paid, a high percentage, okay, very high split. And the team itself, the entity, right, does not get very much, okay? And then at the end of the day, to me, it's not very cohesive. It's more fractured, know? And then I don't really know who pays for, if they have admin support, right? If they have staff, who pays for that? I have no idea, But I doubt that they are in the black at 30%, which is what the standard is financially. Yeah. And then there's another way or another kind of model, which I see as well, which is slightly different, meaning they're all under the same umbrella again, but all the units and volume are attributed to the team lead, okay, which is what my model is. But then again, that's where the kind of the plans or the models deviate a little bit, right? Because I adhere to a very specific financial model. And I don't think that the teams that operate that way, the second method, do. Again, their agents get paid a very high split, from the team. And then so not a lot goes back to the team, right, to funnel and pay for the marketing, advertising expenses. So again, I'm not really sure who pays for that, where that money comes from. And then undoubtedly, if the money comes from the principal agent or the lead or whatever, right, and they're not getting the money from the splits, right, then it can't possibly, it's just math, right? It
simple
can't,
math.
It can't be in the black then. It's got to be in the red, you know? And so that's important because I was saying before off camera, it's important because it depends on what your goals are. It goes back to that, right? So if as an agent, as a team lead, whatever, as a team, if your goal is just to work and do the work and get paid in the short term, year to year, right? And that is it. That is all you hope for. Okay. that's okay. Then that's probably an okay way, an okay methodology to get there, right? But if the goal is to build an actual business that is worth something at the end, right? And that'll survive you as the agent, or you as the team lead, or you as, even if you're solo, it survives you, right? Then that's not really a good approach if that's your goal, right? Because in order to have a business that can be valued, right, from a business brokerage perspective, and can be sold, right, you have to show financials that you're in the black. Otherwise, it's not worth.
There's
anything.
no value.
Yeah, there's no value.
Right.
Yeah. So again, it goes back to what the goals are. Yep.
That's interesting, because our CEO, he sends out I love it. He sends out an email every Saturday, and this Saturday he after this is after GBSB, which means Get Black, Stay Black. Which that's what it's all about. Yeah. Okay. Sorry, I didn't explain that before, but GBSB is what the accounting. The accounting, is a term for us to stay in the black, and the reason why we have that setup is it's executive accountability. So they want to stay in the black,
That's
so
nice.
they have to get information from people that are actually boots on the ground.
Yeah.
So it's hard for them, but I think the what I love about the company is the fact that they will stay, and they're continuing to hedge in a market where everybody else is falling. So the email that he sent on Saturday was the 30 names of companies that we don't hear about that were back in 1996. So these are major corporations.
Oh, wow. Yeah.
That we are, like the names that he was bringing up, like Countrywide, all these other different companies.
My
they're no longer part of the business.
No. Yeah.
And a lot of it has to do with exactly what you're talking to, the math, the simple math of staying in the black.
Yep.
And so I think it's brilliant. And that also, to be honest, is a recruiting message.
It is.
For people that are looking at Alice's team, because you have to have somebody that knows how to count the money.
Yeah.
If you don't, then you're going to see a lot of smoke and mirrors, a lot of people that are up and like, oh yeah, we did 100 million, but at the end of the day, what's in the piggy
or we're
bank?
the number one in the world, whatever it is, whatever ego boosting statistic you want to do.
You can paint any picture on the internet you want to.
Yes.
Right.
Yes.
So
everything's true.
Yeah, but this is like the meat and potatoes, and I love it that you're going deep into this, because that's something that nobody talks about.
Yeah, it is. And I mean, you could get really finite too with it, meaning like you could break down all the subcategories, right, in expenses, or all the subcategories in cost of goods sold to see like, okay, is this really bringing, and we're going to talk about this now too, is this bringing the ROI that it's intended or needed, right?
Right.
And so a couple of questions, and this could apply to your industry too, Bill. It's not just real estate brokers, do you know the cost of each lead? Like literal dollar amount. Do you know the cost? Okay. And by that, I don't mean, some agents pay for leads, right? I don't pay for leads, but I still know what the cost per lead is for me, for my team. Do you know your specific number on ROI for each individual lead source? If you don't, how then do you determine for the next year and plan for the next year of which lead sources are worth it and which ones are not, and that you need to drop?
Right.
I'm trying to.
So how would you measure that? Like, because you're basically measuring your business, which
you're measuring it.
There's more people that don't measure their business than they just shoot from the
hip.
Yeah. And I've been doing this for 27 years, and this is probably the first 2 years I've actually started measuring my business. So I found big gaps in my business. Like perfect example.
It's interesting how you find stuff once you really start digging into it.
Yeah. Like you're measuring your leads.
Yeah.
Ad space. Yeah. Is that return on your investment?
Yeah.
No. There might be something where you're paying $500 for, and it doesn't return any investment.
It doesn't give you anything back. So the best way that I've discovered how to measure that is, it's not an exact science, but you need to really track it throughout the year. So whenever somebody calls you, right, or whenever you get a prospect, right, you need to know what that lead source is. So that's huge on my team. We have to identify the lead source. And if they don't say it, they don't tell us, we ask it. And there's been times where I don't know why people dodge the question, or they give you a nebulous answer, or they say
I don't get that either.
Hey, well, I saw you on here, but then I also, you're my neighbor. So then you have to suss it out, meaning it could be more than one lead source, but you have to kind of figure out which one was the primary, right? And that is one of the goals that we have, like right away, like right when we meet with a client, we don't let that get away from us.
Yeah.
And so then we track that in a spreadsheet. Okay. We're old fashioned. We track it in a spreadsheet. And then at the end of the year for our planning meeting for the next year, then we break it down, right? Okay.
What
like
percentages came from what?
Exactly.
Yeah,
So
right.
these are the deals that we did, right? That we closed and the clients that we served. Okay. And then these are the lead sources. And then this is how much we paid, if we paid things for lead sources, right? Which we don't, but this is how much we paid. Okay. And then this was the ROI, right? And so then we look at it like, okay, was this really worth it? Did it come back with at least a 6 to 7 times ROI? And if it didn't, then it's time to cut it loose.
Right.
So
are there acronyms that because like I'm thinking of what we do. So we have past client, current client, referral.
They are, yep.
Yep. And so realtors, builders, I mean, how do you measure? I guess is there certain
There's
categories?
certain buckets. Yeah. So the buckets are very similar. Past client referral. What else? Agent. We get a lot of agent referrals from other agents around the country or in the city, for example. Trying to think. Allied partner referral is another one. So like if a lender gives us somebody or, I'm trying to think what else. Sphere. So Sphere is like friends, family, people that we know.
Business, yeah.
Yeah, business. We have an interesting one. It's called opposite side of transaction. So it's if we sold the house previously. So typically it's usually when we were the listing agent and we sold the house previously and then we didn't represent the person who bought it, but they are the current owners. Okay. So then after closing, because what is the statistic? Like 80% of realtors lose touch with their past clients.
Right.
So we stay in touch with them. And we wish them happy home anniversary, things like that, And then, again, we feel we know the house the best because we've sold it before. And so that is a category in our lead sources. Yeah.
Okay. Cool. Wow. Sounds like we're on the same page.
We're similar.
With regards.
Yeah, it's very similar. Yeah.
How long have you been doing this, like this way?
The financials, or what do you mean?
Combination. Combination of the financials and then when did it click for you, I guess is.
Oh yeah, it wasn't right away. So it was at different times. So the tracking of the lead sources and the leads was probably with when I was at Coldwell Banker, and I was probably in the business for about 5 or 6 years. It took a while before I was like, wait a minute, there's got to be a better way to do this structured and then like run it like a business, right? And I need to know where everything's coming from. And I didn't even have a large team, it was just something that because of my background in finance and in the business world, that I was like, okay, I have to like write some sort of plan down.
Right.
And so that's when it all started. And it started on just a Word document, believe it or not.
Really?
Yeah, a Word document and an Excel spreadsheet, and I was just tracking things. Yeah.
Huh.
And then every year I would write like a business plan for myself for the following year.
Yeah.
Like, this is what I did this year. This is what my goal is for the next year. This is how I'm going to reach, that goal. These were all my lead sources. So it was very simple back then. But that's when I did that. And then the honing in of the financials and reviewing them like every single month, that was embarrassingly not until much later. I want to say maybe about 10 years ago. Yeah. So
I don't feel so bad.
No.
I mean, but like that's how I felt. I'm like, it's kind of like, you ever seen the movie Dumb and Dumber where he's walking out of the bar and he goes, "We have a man on the moon." Like somebody landed on like that's how I feel in the last 2 years. I'm like, you've got to be kidding me.
You've got to be kidding me.
If
Yeah.
I would have done this way sooner. That's why I was trying to drive home.
So much better off. Yeah.
Oh my gosh.
So much better off.
Yeah. So I feel stupid.
I mean, I feel embarrassed and stupid because like my major was in finance. The thing is, it's not an excuse, but like you get so hung up on like the day-to-day details and being busy and servicing clients and all that like this just kind of this is not as sexy. It just goes like on the back burner.
Right.
And so you're like, oh, it'll just take care of itself. But it won't. It's not going to take care of itself. Like you need to take care of it,
Yeah.
So it's not sales. It's not client facing. It's not anything like that. Yeah.
I always say that I'm kind of like the painter that never like paints his own house. Like I'm the guy. I'm that guy. Like financially, like, and we're fine. Don't get me wrong. We're not going bankrupt because I made it through 2008. Okay, I had investment properties and everything. That wasn't a statistic.
Oh my
But
gosh.
what I'm saying is that like you like there's a gift that you have typically. Like my gift is going out and selling and
Yeah.
getting out and making it rain. But
Yeah.
like when you get it in the back end of things, it's very difficult. But I'm forcing myself every month, like you said, to sit down, count the money, do a money tracker,
Yeah.
really figuring out where the money's going, and using apps too. I'm using Monarch, which is actually a really good app, by the way.
Okay.
So
Okay.
it just shows you transactions, and my wife and I are both on that. So it's a personal thing too, but at the end of the day, to run a business, now we're getting into maybe a P&L model, which
Yes.
is exactly what you're talking about. So it's kind of cool, like when we're talking about all this stuff on these
There
episodes,
is,
that
yeah.
there is a little bit of a
Even like going back to that, the percentages in the financials. So even something like a singular line, like when you're running a team, right? A singular line such as salaries. I'm just gonna just clump together not anybody's individual salary, but just that line item. Everybody's salary is pulled in together. There is a percentage for that,
Yeah.
and so I just go based upon. I have a printout of. What do I call it? It's it's all of the percentages for the categories. Like if I were to have perfect financials, does that make sense? Nobody's going to achieve perfection or financial nirvana. Okay. But
Right.
you have at least the percentages to compare, right? Side by side. And again, one, that is a very easy way to determine where you are, right? On this map, the financial map. And then it makes the decisions a lot easier. So like if, for example, you need to bump up salaries, right?
Right.
Can you do that? Right? It's very easy. It's in black and white. Can I do it? Right? Or
that's transparency
it's
too.
very
so
transparent.
You can,
Yeah.
So do you show your team the transparency of the
I show my
numbers?
operations manager. Yeah. Like
Okay.
he saw in all its naked glory. Yeah,
Yeah.
is what I call it. Yeah.
Yeah.
So, and again, it's not that it's not moldable or bendable. So like if it's not there, if the money isn't there in that category, that's okay. Maybe there's another solution. Maybe we can. Do you see what I'm saying?
Yeah,
Maybe
yeah,
we
like-
can decrease market something, and in order to retain the people.
Right.
I'm just saying, for example, right? So there's a lot of ways. There's a lot of ways to kind of look at the financials and figure out solutions, is what I'm saying.
What I found when we went to the P&L training in Cleveland was like it doesn't have to be black and white all the time.
No.
So like I found like they gave me my whole profit and loss of our branch.
Is that scary?
It was.
Okay.
Because we also had like there was still like bonus structure that was in there from like payouts that they had
Oh boy.
that from other loan officers, because we put some good packages together for loan officers.
yeah.
But those weren't out of the equation. Those are like part of the line
They're
items.
still there.
Like
yeah.
you said, somebody's
They
got to
don't
pay
disappear.
for it,
Yeah.
right? And that's part of your. So you have to get out of the red to get into the black, and then show the profit there. But then there's also, like you said, salaries. There's benefits on top of that, and then there's also brick and mortar.
Yeah.
You know, one of the things that my brother has always mentioned. He goes, "What do you think the number one biggest expense is?"
Brick and mortar.
No.
No? People.
Because it may be different with the real estate world, but you have not only the salary, but you also have the benefits and the
do.
insurance behind
Everything.
that. You know,
Yeah.
do you have that with your team?
We don't.
Okay.
No. It's just simply too expensive.
Yeah.
I could, I guess if I really wanted to. But we just don't have the, what is it called? We don't have the size. Right.
Most
companies, they have that like leverage of like the sheer volume of employees, buying into a package. Yeah.
Yeah, even our companies,
It's
our
disappointing.
insurance is one of those kind of hard topics
It's
to
very
kind of
tough.
discuss right
Yeah,
now.
It's very tough. Yeah.
So wow, that's interesting. Are there any changes as you're going through this year that you're going to kind of mold into next year with regards to your finances?
Yeah, I don't think so. Not too much, because we've basically weaned ourselves off a long time ago of any like paid lead sources. So most of our business, if not all of it, is organic now.
That's great.
It's great. It is really good. Yeah. So I don't think we can get any better than zero paid for like outside lead sources. So I think it's just the cost of things are so high now. You know,
It is.
Everything is so high.
I even checked the CRM thinking, okay, well, I'm going to get into the CRM.
You're just going to cut this. Yeah.
It's got everything. It's got it like, but it was like $2,000 a month. I'm like, why? Like
Yikes.
it doesn't make sense to me. Well, the AI is about $1,000 and that's going to make your life completely different. I'm like, no.
Great. Yeah.
No, yeah, great.
Yeah.
I can't even see it. So like, it's too new, too soon, right?
Too soon. Yeah.
Wow. So yeah, what's like as far as like the finances go, is there anything that like when it comes to lead sources, is there one that you thought that really came and surfaced that says this one is going to be here for a long time? Like,
I would say it all leads back to relationships in our business, right? So past client referrals, sphere. I mean, those have almost always been our top lead sources, and that's just what we gotta focus on. Yeah.
Cool. Awesome.
Yeah.
Well, I think this is probably one of those things you could deep dive even further into, like as we go further.
Oh, yeah.
But I appreciate you being transparent because I think that's huge for people that never even thought about the accounting piece.
Yes.
To really go into that and go, okay, look, this is. Do I want to make money in this business, or do I just want to have like this big Instagram post of me doing all this volume and not making
Splashed
money?
everywhere, yeah.
So I really appreciate it, Alice.
course,
Thank
yeah.
you so much. It's been such a joy.
No problem.
We'll see you on the next episode of the Alice Chen Podcast.
See you next time.